Hello, Scott Bear here at Mortgage Pro. I'm your in-house mortgage lender here at Realty Pro. I'm here to make you successful. I'd love to be able to work with you. If you haven't worked with me in the past, come on by the office here and visit with me a little bit. I'd love to be able to get to know you and answer any questions you may have about financing or even help you on any particular borrower that you might be working with and whatever financing issues you might be dealing with. I'm more than happy to help. Love to be able to close some transactions with you. I'd like to make you aware of some new news that has come out. I've announced these things at the meetings before, but wanted to make sure that you are aware via video as well. These things can't be repeated too few times. So very important rules that have come out with Fannie Mae. Fannie Mae is now going to check credit at the very end of the transaction just before funding. Very important. Fannie Mae isn't going to necessarily check, but the lenders will, and the lenders will do it because Fannie Mae is requiring it. So if a borrower has obtained new credit throughout the loan process and they do an inquiry at the very end there and find out that the borrower has obtained, let's say, a new car loan or went out and bought a refrigerator and financed it, and that changes their debt to income ratios, it very well could make them not be approved for the loan that they're trying to be approved for or trying to close. It can also extend the closing period and create a lot of tribulation in the transaction because obviously everything is very time sensitive in a mortgage. And if scores are rendered and the scores don't qualify for the program that they're on, there goes the loan. So it's very, very important that the borrowers do not obtain any new credit throughout the process. I'm definitely going to be reminding them of that fact. I would also request that you remind your clients as well. Make sure that they do not obtain any new debt. Also, Fannie Mae is changing their rules on purchasing foreclosures as well. Now, in Washington, we don't have to worry about this as much because most Washington foreclosures are non-judicial foreclosures, which means there's no statutory redemption period that Fannie Mae has to worry about. But with a judicial foreclosure, Fannie Mae will not be purchasing that property, will not allow it to be purchased if it's within that statutory redemption period. And the statutory redemption period in Washington for a judicial foreclosure is 1 year. So if your foreclosure that you happen to be working on switches from a non-judicial foreclosure, which would typically be the foreclosure that would happen in Washington, if it switches from a non-judicial to a judicial in the middle of the process, which can happen, you need to be very well aware that Fannie will not finance that property for an entire year until that redemption period has expired. Very important if you're an investor, you need to be aware of that. Now, Freddie might finance it, but that could limit your product offerings and what loan programs you might be able to give whatever borrowers might be looking at that property. So make sure you are well aware of that. Other than that, that's about it, at least for today. It's a Monday. Make it a successful Monday, and we'll talk to you soon. Bye bye.